Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Hello and welcome back to Fintech Daydreaming. Today we're officially at 2025, marking the milestone for us starting season 11 of our podcast. My name is Ville Sointu. I will be hosting today's episode of Fintech Daydreaming, but of course I'm joined as usual with my partner in crime, Paul Krogdahl. So Paul, how is 2025 treating you so far?
2025 is treating me fantastically well, Villa. I do believe in season 10, which we finished off at the end of last year, we agreed that we would stop saying partner in crime. We even made a call out to, legal aid and everything else. So let's keep that one out of this fintech podcast from now on, and just say friends or something else.
So that's the New Year's promise already broken. Okay, good. We're off to a good start here, I guess. But you're right. Let's figure out something less criminally implicating for the beginning segment of the podcast. But that being said, this is a Nordic FinTech highlights episode, as we usually have in the beginning of every season, and that means that we're also joined by Janne. So Janne, how about you? 2025, feeling good?
Yes, feeling good. I actually quite recently came back from Africa. I spent my Christmas and New Year in Tanzania.
Oh, nice. Which parts of Tanzania did you go to?
Quite a few places. I went to Dar es Salaam, but then also a few islands, including Zanzibar, and then I went inlands to the safari. But basically good stuff, some light, some warmth, some water sports. Saw how life looks like in countryside and big cities. Saw some big animals like giraffes and lions, but actually have to say that the only downside was the fintech and the payment side. There's still quite a lot work to do in that area.
So cash is still king.
Yeah, unfortunately, and I don't even want to know how much I spent on transaction costs, because in the worst case, it was hard to find an ATM that even works. And then you could possibly find an ATM where you can withdraw 80 euros and pay 6 euros in commission. So it's not very, very efficient.
I actually would beg to differ, because Tanzania is one of these countries where mobile money is fairly well established. So they have major mobile operator providers providing fairly extensive breadth of financial services. So my next question actually would have been that, did you get a chance to try those out? But I guess the answer, based on what you just said, is no, you didn't.
No, I was very unprofessional. I didn't get all the apps and accounts beforehand. I think there were some local apps, but they were not either working in every place. So it was still like you could pay some places by card and pay maybe some extra, or then you just had to withdraw cash. And of course, the great part is that the biggest bill is worth 4 euros. So if you actually buy something bigger, so you actually need a stockpile of money. But yeah, that's still a minor issue. It was a good trip,
Yeah.
but still some development to be seen in that field, especially regarding how payment cards work.
Yeah. Again, I've done one business trip to Tanzania before, and I was staying at the 5-star hotel in Dar es Salaam, and I got the food poisoning, the worst food poisoning that I've ever had on that trip. So, but that's a story for another time, I believe. But that really is the thing that I remember from Tanzania, the food poisoning that I got from the buffet from a five-star hotel. But anyway, let's get on with the episode. We have a lot of things to talk about. We haven't had a Nordic FinTech highlights episode for a while now because we had a bit of a different schedule in December, so we have a lot of ground to cover. But before we go to the headlines, Janne, the usual thing we do, of course, at the beginning, and this is continuing on to season 11, is the joke. So, do you have a joke for our audience? The first one of the year.
Yes, I do have a bad engineering joke.
Go for it.
So, guys, have you heard about the band 1023 MB?
Not at all, no.
No.
Yeah, of course not. They haven't got a gig yet.
No. Well, I guess consistency is a blessing as well. So again, the being we're really on track with the bad jokes is a good start for 25. Fantastic. Good. The other thing we need to do here, of course, before we get to the news headlines, is the overall trends. So again, Janne, you'll be following the fintech scene here in the Nordics. So what are you observing as the main trends as of now?
Yeah, so if we look at the ending of the year, I think both November, December also reflects the things we have seen in general throughout the entire 2024. So you could say both positive and not so positive things, but I think we have brought it up, and especially some parties are quite dramatically talking about fintech winter, and it is true that the funding area has been quite quiet. There's been a couple of significant rounds as well, but maybe the volume in total it's quite far away from the best days a few years ago. But on the other side, I think we have more and more self-sufficient fintechs who are making pretty good revenue and are able to grow in that way. So I think if you think in a positive way, fintech has become more mature and there are companies thriving by their own. So you could also see it as a very good thing. Other thing, I think more than ever we've seen Nordic fintechs expanding like truly abroad. So the normal case usually has been like, okay, let's go pan-Nordic, then let's go maybe Central Europe or EU, UK in general. But now we've seen many new openings like in Canada, US, Mexico, Southeast Asia. So Nordic fintech is becoming like really global thing. That's of course great news. Then one of our favorite topics, open banking. So pretty much on a weekly basis, we can hear and read and see something, some new partnerships, some new launches around open banking, and particularly under that account-to-account payments is something which is really kind of hot. But on the other side, I haven't seen that much things in production yet. So I think we are getting there, but what's the real volume of the market share of account-to-account payments, or how much are these different account data things being utilized? I think we're still like on a sort of planning phase. It's good that there's interest, but yeah, I don't think we're quite there yet, but we will be in a few years. And then the third thing is that banks also, I think we can like investing in tech and new innovation, new partnerships. It has also become like a regular thing. So it's not anymore like, well, we have this IT project. It's more like we do things on a regular basis. And also there's been a few M&A activities, and notably we have several Nordic banks nowadays who are really boldly talking about banking as a service strategy. So those were my 4 points from last year. I don't know what have you noticed something else, or do you agree with me?
Along the same lines, I think the open banking, open finance discussion is going to be interesting. There's a couple of things happening now that will drive that forward. Number one, of course, is the payment service regulation, which seeks to harmonize a lot of the PSD to initiated things happening on the API space, and it should make things easier for fintechs to provide these services. Something that was fairly difficult to pinpoint what actual value has been provided by open banking so far. But I think the PSR is going to make that easier, and we're going to see some acceleration on that space. At least that's what we hope. The other thing that will affect the fintechs in Europe is the settlement finality directive, which is coming into force maybe soon. I don't know the exact schedule, but once that happens, it means that fintechs, payment service providers, and e-money institutions will have access to direct central bank settlement. That should make things very interesting, especially from a commercial bank perspective, because they will no longer be necessary as intermediaries for central bank settlement. So again, really, really looking forward to how will this shift the dynamics in the fintech space. And then on top of that, we can of course always say the thing that has happened already last year, and we already discussed as well, is the fact that since iOS opened up the NFC antenna on the front end of payments, that means that we're going to see more and more payment wallets coming into limelight now, because NFC has been kind of this missing link in many of these wallet propositions. So I think those would be kind of my main trends to follow in the European scope at least. So what do you think, Paul? Anything to add?
I think from looking at last year's perspective, I think what Janne said is quite spot on. I don't think I've got very much to add to that. As for looking forwards, based upon what we saw last year, I generally try to avoid giving predictions, partially because my predictions end up being wrong at one level or another. But I think payments is going to be a real hot potato anyway. I think we're going to see a lot more around payments. There's instant payments. There is, as you mentioned, Ville, about the NFC. There is so much going on, and I think there's going to be more going on, account to account, request to pay, so on and so forth. So where we used to once upon a time say payment was boring and a waste of space, it is now becoming the new kid again on the block. So I think for 2025, we're going to see a lot more of fintechs moving around in this space. We're going to see a continued growth of open banking. I think embedded finance is going to explode. Even here in the Nordics, here in Finland, we are going to see, I think, an awful lot of movements around embedded finance, potentially, banking as a service, banking as a platform, so on and so forth. So I said I wasn't going to give predictions. I just did. But there we go.
Indeed. But finally, on Janne, you mentioned account-to-account payments. I think this has been discussed for so many years, but that's an interesting thing especially from one perspective, and that is that it's interesting from a fintech payment service provider and bank perspective. It is less interesting from a consumer standpoint, because account-to-account payments, to a large extent, as far as I'm concerned, as an individual consumer, that already works. There's nothing really that revolutionary from that perspective. For me, that as an end user, again, it already works. The shifting power balance in the account-to-account payments and who pays who and how much is kind of a plumbing question, which makes us fintech nerds interested in those things. But that's why it's sometimes difficult to pinpoint what exactly is the point of this account-to-account hype, because again, it's basically plumbing. But that's what we love as fintech nerds and payment nerds. So I think that's what we're going to be talking about a lot still, even this year. Excellent, good. So that's for the look back to 24 and some of the trends to follow, perhaps for 25. But I think we need to move on to the news headlines that we have picked to discuss for this episode. And as usual, we're going to start with you, Paul. So Paul, from the November-December headlines, which one did you pick?
Yeah, so I don't know if we always start with me, but it's always nice to start with me. Continuing on the trend and discussion around payments and embedded finance and everything else. As you know, I'm quite enamored by what Elisa Bank are doing here in Finland. I mean, they started off as a fairly small bank, they're growing, but their strategy is right in the middle of what I get excited about, which is the platformification of the banking industry. They're very, very focused on embedded finance. They are very focused on the SME market space here in Finland, an awful lot of hot potatoes. And added to that is their continued partnership with Enfuce. So Alisa Bank and Enfuce have had a partnership for some time. They've delivered cards to retail consumers. As you know, they offer some capabilities, some basic banking capabilities, specifically around loans and deposits to individuals. But their growth is very much focused on the SME, small corporate space. So what they've done now with Enfuce is expand their retail card capabilities, credit card capabilities into the SME space, and are now offering credit cards to small corporates. And they're extending this to also being able to, through their banking as a service offering, where they're offering this as embedded banking capabilities to third parties, they're adding this card capability to that offering as well. So I think this is, one, it's exciting news. It's great to see two of the large Finnish fintechs, if we want to call them both fintechs. Yes, they're fintechs, both Enfuce and Alisa, strengthening their partnership. But I'm very excited to see how Alisa Bank is really demonstrating the leadership around embedded finance and banking as a service within inside of the Finnish market. And I think this is really going to be something to keep an eye on as they continue through 2025.
Interesting indeed. Alisa Bank has been our favorite for sure over the past couple of seasons here in Fintech Daydreaming, because again, they seem to be in the headlines all the time, especially when it comes to their embedded finance and interesting partnerships that they're being able to do here in Finland. To me, the interesting bit about this news story is that they're offering credit cards for SMEs. If you read that headline, it doesn't actually sound that interesting. But ultimately, if you are a small company and you want to get credit cards, corporate credit cards, that is not something that you will automatically be able to get, especially because a number of issuers of corporate credit cards is quite low in Finland as we speak today. Now, Alisa Bank being able to, as a fully licensed bank, being able to offer credit cards, of course, is a very interesting proposition. I haven't really looked at the pricing that they're offering compared to other competition, but I would presume that they will be able to compete, if not on pricing, at least on the easier onboarding and issuing processes for these cards. I've personally been part of many companies in the past with credit cards, and it's the journeys to actually get those cards and indeed use and service those cards are horrible. So the bar is very low for corporate credit cards in general, and especially for the SME segment, practically non-existent offering as of today. So again, interesting to follow how this will not only be built as an offering for Alisa Bank, but also how will this push forward the incumbents in this space in Finland.
Alisa Bank is also, though, doing very well in leading as a digital bank. They are digitally first. They are, without branches. I think they're doing some good stuff.
Yeah, indeed. And by the way, corporate credit cards is a very good business case for the issuing bank, because the interchange fees are significantly higher that the merchant need to pay for corporate cards compared to private cards. But Janne, so what do you think? Are you a heavy user of corporate credit cards in general?
I wish I was, but as I'm running a SME company, so yes, just like you mentioned, it's not a piece of cake. We have a few debit cards, and then we have this expense management solution, which is not really a credit card. But yes, I got actually interested to see how the process works with Alisa, and I perhaps have to look into it as a potential customer. How does the system work? I know for sure that with traditional banks, there's just so much bureaucracy that it doesn't always make sense to deal with them as a small company. So yeah, looks really interesting. The other thing, what I was thinking, if you guys know, so does it from a technical point of view, is it a big difference if you are issuing a credit card or debit card or prepaid card or so on? So if you have a neobank, so how is the technical setup? Obviously, Enfuce can provide both, but what's the architectural thing there?
Sure. So from a technical standpoint, again, from an end user standpoint,
Yeah.
they have platform to what they even say in their press release is a highly scalable cloud platform that is able to do all sorts of great things, including credit cards and debit cards and prepaid cards. Now, technically, these are not that different. So if you look at the actual physical card, that has the secure chip in it. You pretty much have the same physical architecture there. The only difference is the application that runs on the smart chip itself. And again, those are just code differences on that side. And then on the backend side, of course, you need to have different processes for handling credit transactions compared to debit transactions. They do have different parts of the rule books for the schemes, but in general, if you're able to do debit cards as an issuer processor, you always are able to do credit cards as well. The critical difference actually is not technical. It's the fact that you need a fully licensed bank in order to be able to establish a credit line. So that's why many of these neobanks are not able to do that, or are indeed not doing that, because they don't have the appropriate licenses to do that. So again, full bank license is necessary for distributing credit, and that's why Alisa Bank is in a good position, because they indeed are a fully licensed bank. The other part of that, of course, is that you do need to have certain risk management processes and be able to do these consumer credit things, including credit cards. And many of these fintechs just don't have those processes in place. Again, if you are a fully licensed bank, you need to have those processes in place. So that's kind of a self-evident kind of loop there. But again, technically, I don't see a huge difference, and I'm of course very open to hearing from people working closely in the credit card industry to prove me wrong here. But as far as I can see, the technical differences are not that big. It's really about the risk management and the licensing piece of it. Good. So the one thing that, by the way, I didn't see from this announcement, Paul, was that are they going to be supporting the mobile payments, so NFC wallets like Apple Pay with these new cards? Did you notice?
That's a fantastically good question. I didn't see that either, and maybe it's worth getting someone from Alisa Bank to join us in a upcoming episode to discuss some of this in a little bit more detail. So
Indeed.
keep a lookout on future episodes.
Indeed. Alisa Bank did have a new CEO quite recently. So let's see if we're able to get somebody from Alisa Bank to join us for a discussion. That would be an interesting thing to do for sure. But moving on, the next up, of course, as usual, I'm going to say as usual again, is Janne. So Janne, which story did you pick from the end of last year?
Yes, there was some interesting news in Norwegian language, but I could cover it. So Lunar, the Danish neobank and perhaps the leading Nordic neobank as well. So they took one step closer to become a full service bank by starting to offer mortgages in Sweden. And I think there's two very interesting things in this announcement. First of all, they are doing it in a collaboration with Söderberg and partners. So this is kind of like a nice example of collaboration between a techie fintech provider and then maybe a bit more traditional financial institution. And as Lunar addresses it themselves, so they say that they are extremely good at the digital user experience and so on. And then Söderberg is good on the financial side. They highlighted though that not everyone is able to work in such a collaboration, with fintech companies. But I think this is a good example of collaboration, how it should be done. And then the other thing is definitely that mortgages has been clearly something that sort of a deal breaker. That hey, what is a real bank? What is a neobank? So mortgages has been one thing that differentiates them. And then of course when we're in Finland, so there are two other things also: the tupas and the Finvoice thing. If I would get those three sorted out, I could actually ditch my traditional bank. But what about you guys? Would you ditch your traditional bank if you would get mortgages from a neobank, or what are the criteria for you?
I think that's a fantastically interesting question. Would I ditch my... I think we're moving into that area where we start questioning, do we still only have one prominent bank in our lives, or do we spread our financial life across multiple vendors and providers? And I think that's where we generally are today. There used to be a time where you would say the bank that has your mortgage is your primary bank, but I'm not quite sure if that's true anymore. I mean, if I look at how I manage my life and my finances, I'm not 100% sure. And would I switch bank if I got a better mortgage agreement somewhere else? Probably yes. And I'm actually wondering, when we talk about mortgages, what are mortgages going to look like in the future? For instance, in Finland, the mortgage market has been fairly static. Compare that to the UK where I grew up. Mortgages have been disrupted on an ongoing basis in the UK. And I'm just sitting here waiting for the definition of mortgage in Finland to get disrupted. And I talk to the banks here, and they seem to have I don't know if I can say arrogant, but they have a view that mortgages are mortgages. They've stayed that way and will always stay that way. But we always know from the industry that it only takes one smart thinking fintech to come along and disrupt all of that, and suddenly mortgages will be seen differently. You know, in the UK, you've got offset mortgages as a good example. How long is it going to take before offset mortgages come to Finland, as an example? I know a lot of this is partially driven by regulation and by the government. And even in Nordics, back to what you were saying, Janne, even in the Nordics, the way that we define mortgages and the banks provide mortgages are very different between the Nordic countries. I mean, I think you need to have a advanced maths degree to even understand mortgages in Denmark. In Finland, they're a lot easier. So I actually, for a Danish bank to offer mortgages in Sweden, I think that's a good move. It's a smart move. It's great. I'm more intrigued, though, by the fact that you found this article in Norwegian. So you've covered off most of the Nordic countries in one go there. So that's really good. But no, back to your original question. Yes, I would very easily switch if I got a better offer. But I think it comes down to looking at my financial life and my financial well-being in totality across all of the different places where I now have my money.
And the same for me. I would have probably very little doubts about switching my mortgage to another provider if they gave me a better offer. That being said, for a very long time now, we haven't really seen any failures as banks. So again, banks defaulting and then basically you losing your apartment or your home because of that. We haven't seen that in a very long time. We haven't even seen risks of that happening in a very long time. So we are becoming we're distancing ourselves from things like that. But that is still something to bear in mind. If you are getting your mortgage from one of the incumbent banks that are very well established and have a very healthy balance sheet, then that is something that you should consider. The other side of that equation is that it's probable that we're going to see fintechs and neobanks coming into this segment, providing very competitive rates on mortgages, but then coming in perhaps with much more risk on their balance sheet and even, let's say, shorter runways in terms of crisis, being able to handle crisis in a liquidity crunch, for example. So again, it is something you need to balance yourself in terms of risk. Do you want to take the risk of everything continuing to go well, and then you will be fine and getting a lower rate as a result of that? Or are you more risk averse in terms of these systemic level shocks that we haven't seen in a long time, luckily?
There is another part to this as well, which maybe it comes back to making predictions going forwards. But I'm wondering whether we are still seeing a potential shift in trend by younger generations favoring rent or other methods of living rather than actually buying, and therefore taking mortgages. And therefore, is mortgages still going to be the predominant way for banks to make money in the future? And I'm predominantly looking at retail here, right, rather than industrial or commercial lending towards properties. So the other part to this is, yes, there is still a lot of money for banks to be made in mortgages. I mean, there are certain banks here in Finland that predominantly get most of their revenue from mortgages and interest on mortgages. But is that a viable long-term strategy for banks in the future?
That's a very good question. And another thing that occurred to me is that in the housing segment in general has been going down. The amount of new construction, for example, here in Finland has been in a decline for quite some time now. And the amount of mortgages being distributed as a result has also been going down. Now, Lunar is entering this space in a downward trend, and it's going to be interesting to see how they compete in that segment. Even though, of course, Swedish market is different from the Finnish one, but I think it's a broader trend than just in Finland in terms of the decline in the real estate segment. And then Janne, to the other point that in your question was that, you know, as long as you would get the digital identity and the invoicing done in a neobank, you would shift immediately. That's actually an interesting point, because at the moment, for example, if you use Revolut in Finland, you're able to get pretty much everything except those three things. You're not getting mortgages, you're not getting invoicing, and you're not getting the digital identity in Finland. And of course, you're not able to get the Finnish IBAN either, which is partly related to the invoicing thing. Now, I think these are things that Revolut is trying to solve right now. So they are actually getting local licenses in many European countries. I would presume that the Nordic countries are not first in the line in terms of the market size for Revolut. But as soon as they get them, they will be able to solve the invoicing bit at least. And then people might consider paying their salaries directly into Revolut instead of their main bank. And then the final step in that journey would, of course, be the house loans and the mortgages. So again, we'll see. I can see, for example, a picture where I would have a mortgage from another provider. Then I would just use my main bank just for identification and invoices and nothing else. And that would be a nightmare scenario, of course, for the bank in question, because again, the profits are coming from distributing credit, as we know.
Yeah, actually, back to Alisa, which we just talked about. So I think I once asked them that when are you becoming a real bank and adding tupas and mortgages. And I think the other one they answered strictly no, and the other one it's on the list. I don't remember which one was it, but you should definitely ask if you get someone on the podcast that what's their plan on this becoming a real bank thing.
Yeah, I'm sure they love the question, when are you becoming a real bank? Considering that they are a bank. But anyway, we'll make sure to say hello from you, Janne, if we get somebody from Alisa with that question as well. Excellent. Good. Moving on, since we're quickly running out of time, we could be talking about these things forever, but we do need to cover the third story of this week, which is mine to introduce here into the conversation. And I also picked surprise, an embedded finance story, and also featuring Enfuce. So we're going to have two stories featuring Enfuce, but Enfuce actually is not the headline of this story. So the one that I picked is that SEB Embedded, together with Enfuce and a fintech in Sweden called Humla, are launching a co-branded grocery payment card for Hemköp. Hemköp is a grocery or a retail supermarket chain in Sweden. It's one of the largest ones. When I lived in Stockholm, I felt like I was always going into either Hemköp or ICA or Coop. So these are the three large ones in at least in the Stockholm region where I used to live. And Hemköp, indeed, being a major brand, was the one that actually did not provide any significant payment card capabilities before. SEB Embedded, together with Enfuce and Humla, are now launching this Hemköp payment card, which is basically a debit card, which allows, if you pay with it, you're able to get more loyalty points, and you're able to have your separate app for it. And again, it's an opening for Hemköp and the involved brands to offer something more specific as a retail or supermarket specific payment card. The interesting part about this actually is not the value proposition provided to the end user, because again, we've seen cards like this everywhere for a long time now. The store cards and even retail chain specific banks have been around for a long time. They have a very colored history in terms of whether they're successful or not. But again, this is another line into that story in the fintech history here in Nordics. But again, the important part, or the interesting part for me, is the fact that they did choose SEB Embedded as the banking as a service provider to do this new card. And indeed, if you read the headline or you read the news article, there's a lot of emphasis on the flexibility and the new technology that they're using to deploy this. And this makes me think that the more interesting things from a consumer standpoint for this are still something that we will see in the future. If they're able to leverage Enfuce's and SEB Embedded's capabilities in terms of being able to do things fast and in an agile manner, then this might be an interesting proposition with new things that still have not been publicized. For instance, we don't know whether they're going to do things like buy now, pay later, for example, that they could do, or whether they would be focusing on things like sustainability, which has been a very clear strategy and a communication piece from Hemköp, especially in the past, that they would be able to promote sustainability related activities also through this partnership and this financial capabilities. We will see. Really interesting to see SEB Embedded being the partner of choice here, especially, and again, interesting to see if another store-based payment card will be successful. What do you think, Paul? Do you have store cards or like a retail chain cards in your pocket?
I don't have any cards in my pocket anymore. They're all digitally on my phone, as most people's are these days with Apple Pay and everything else. But I don't have any store cards either. Don't think I ever have had. Or maybe when I was living in Sweden, I potentially might have had an ICA card at that time, but no, I don't. But I agree with you on this. Back to the fact that it's SEB embedded underneath this, it's again proof that the growth of embedded finance that we have been harking on about for quite some time, Ville, is starting to take foothold. It is starting to grow, and we're starting to see this explosion slowly happening in the Nordics with SEB Embedded, Alisa Bank, etc. One of the things that intrigues me though when I'm looking at this is I'm wondering two things. The first one is there is a major retail chain in Europe that have gone down a similar route, and they've offered an awful lot of loyalty points to their consumers for using the card. But the main reason for doing that is because they're actually taking advantage of open banking capabilities to do direct account-to-account payment, therefore bypassing a lot of the payment rails that Enfuce would be offering today. So obviously Enfuce and SEB Embedded here, or SEB, have taken an approach that's taken advantage of existing rails and capabilities. I'm wondering if they also would look at capabilities that take advantage of account-to-account payments as well. or whether that's a route they won't go on, considering that SEB Embedded is looking at embedded finance as one of their strong points.
That's a very interesting point, and also brings up a difference in this approaches by different retail chains, because I think the retail chain in question is a German one, I think, and so again, since we're talking about names, we might as well mention. So Lidl has provided their own wallet and loyalty application for a long time, and in countries, actually not in Finland, but in many other countries, including Sweden and Spain, for instance, Lidl has been allowed for you to store card information in the wallet and then use that as kind of a one-tap checkout option. So when you scan the loyalty card at the cashier, it at the same time processes the payment in the background. Now, moving that into account to account is of course very beneficial, because account to account payments are cheaper than card payments. So that's an interesting proposition for Lidl. Now, Hemköp, Humla, Enfuce and SEB Embedded are doing the kind of traditional card offering here. So it's a different strategy, because again, if you are issuing a normal card, again, I would presume that these are either Visa or MasterCard cards that the news actually didn't mention. You're able to use that card anywhere. So again, being able to do that, then you will be, first of all, you're able to get more data on the transactions done outside of your own sphere, so to say. You're also able to promote customer behavior, or steer customer behavior to certain directions with different kinds of loyalty programs and bonus programs, even outside your own sphere. So it is a different strategy and a different product in that sense. We'll see if this evolves into a more comprehensive wallet offering, which would then allow them to do things like moving in on-us transactions into account to account, while still offering card capabilities for places outside their own stores. Again, it's an interesting space, and I do believe that one of the trends for the coming years will be these store-specific wallets and payment rails that will be more beneficial for merchants as the ecosystems become more open and making it possible in general. But so Janne, I guess both you and me are used to using the S card, the infamous S card here in Finland, which again is a bank of their own and one of the two major retail chains here in Finland. But other than that, would you use a store card or stick to what you have in terms of payment methods?
I wouldn't, and yeah, my question is that this seems to be like a really trendy thing to have your own card, and I've been always wondering like why, and obviously from the consumer perspective there should be like a clear upside that why would I bother? There should be like some good cashbacks or bonuses or something like that. Of course, now when you don't have to carry the plastic anymore, it's a little bit easier when you can just switch the card from your phone. But still, like there should be a good upside. And then what Paul actually brought up is that besides the kind of loyalty thing, the merchant could actually start to save some money by turning it into an account-to-account payment. So that's actually very, very interesting scenario that they could do quite many things under the hood and actually get rid of the traditional middlemen in the payment process.
Yes, agreed. And to their credit, they are indeed trying. They're offering 25% more membership points or loyalty points for payments with the Hemköp card in Hemköp stores. So they have taken this into account. But ultimately, that has been tried and tested many times by other store cards and with varying levels of success. We've seen failures. We've seen Coop, for example, failing in this and shutting it down. I think it was in Switzerland. They only lasted for like 6 months. And in the UK, there's been a lot of turbulence around this in-store banks, but more specifically store-specific payment cards as well. And I think they've failed to gain traction in any significant way. The only kind of clear exception, at least from a pure Nordic standpoint, seems to be the the S Group here in Finland, and to a certain extent, of course, ICA Bank in Sweden. But again, interesting. I think this partnership approach and having an embedded approach into this payment cards in store is definitely something to follow as we look at the journey of SEB Embedded and the embedded finance space in general here in the Nordics. Good, but we're up against time. Any last comments or notes from you guys? Paul?
Good to be back.
Indeed. Looking forward to a fantastic season. Janne?
Please like, comment, and subscribe.
Yeah, the usual stuff. Indeed. So, with that being said, thank you for listening. This has been Nordic FinTech Highlights, and we will continue season 11 with the usual programming. We will have next up. We will have a very interesting guest. You will have to wait for who that is, but I can guarantee it should be an interesting discussion. And then we're gonna do every other episode again with Janne and the Nordic FinTech Highlights. Again, 25 looking really interesting in the world of fintech, and I couldn't be more excited about doing this season together with you guys as well. So, with that being said, as Janne said, like, subscribe, follow, and leave a comment, leave a review. More people will be able to find our bad jokes with the help of you doing that, and we really appreciate every time we get those reviews. That was it for this time. This has been Fintech Daydreaming.
This is Fintech Daydreaming.